Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that we got some profit taking at 1950, and for the most part, ES has been balancing within a range and has been holding the prior VPOC at 1946.5. Now, bigger picture, we know that buyers are still in firm control, but short term, there could be a bit of balancing in the market and limited upside potential. On the econ calendar, we have no major release that can really drive price one way or the other. And because of that, any pullbacks in price still offer good long setups. The ideal spots are deeper pullbacks to 40.75 to 42.75 or 36.5 to 38.5. Those are good spots to enter long and look for, at the very minimum, a reaction. And ideally, you look for the selling to actually shut off at one of these zones. So in the event that we get a break below 46.5, below pre-market support at 45, considering the current situation on volume where it's running way below average, the selling could actually shut off at initial support or at 36.5 to 38.5. So this 36.5 to 38.5 zone in most scenarios is an automatic buy. And again, it's a key inflection point, and you can look for a decent reversal off that zone. So as long as there's no major selling in the market, we can look to buy these zones below and then look for a reaction back up towards 45 to 46.5 and potentially higher. Now, the market doesn't necessarily have to pull back to those levels. We could simply hold pre-market support or the prior VPOC and then just start making marginal highs. But on the upside, at this point, we could be limited to this 53 quarter to 55 quarter zone on the day time frame. And looking at the current low volume situation, I'm thinking that a 8 to 10 point range is very likely. So if we take that range idea, and let's say the low happens to be 45 or 42.75, then we could put a high of day near this 53 quarter resistance. Looking at the other markets, we got some profit taking at 3800 in NQ, and similar situation in TF where we got some profit taking and some balancing in the overnight session. But the bigger picture bullish bias remains intact. It's just that short term there could be a little bit of a pullback, a little bit back and forth, some limited opportunities on the day time frame because the volume is so light and because there's really nothing on the econ calendar to drive price big one way or the other. So I think that, given the situation, it's important to be selective in the trade setups you do take because it's not a high opportunity environment, right? So even if you miss something, it's not like you're going to be missing a huge trade. And by doing that, it allows you to be aggressive and put on risk when the market is running on high volume and the volatility is there and the opportunities are there. So by being selective in the low opportunity environment, you can be extra aggressive when the opportunities really present themselves. And that's the other benefit of taking things a bit slow and being very selective on the slower type days. So the main idea today is that overall we're still expecting the market to head up towards 1950 and potentially up towards 53 quarter to 55 quarter. At that point, you could be exhausting the range a bit. Of course, there's no real resistance above 1950, right? So all these ideas up here on resistance are based on just the expected range on the day. So, the resistance zones up here are not hard resistance zones where the market has to stop there. If the low happens to be, let's say, 46.5 or 45, then the market could head up, towards the top of the zone before we start getting some profit taking. But, in any case, the long setups are still the more conservative setups in this market. And we don't really want to start shorting this market until we actually see some momentum, some real shift in the underlying theme that's currently in play. And, that might not happen until later in the week. So for now, the main ideas are still going to be on the long side. That's really still the more conservative side to trade. And again, at the very minimum, we're expecting a tradable reaction. but this 36.5 to 38.5 zone definitely has potential to shut off the selling and reverse the market back up towards the 45, 46.5 and potentially even the 48 to 50. So those are the main ideas. Let's see how well the buy side holds up this morning, and we'll take it from there.